Welcome back to 90 Days Better. In the second installment of this series, we're tackling a challenge that merges strategic investing with disciplined execution, turning $1,000 into $10,000 within 90 days. This isn't just about beginner-level tactics. We'll dive into calculated, high-conviction plays that leverage market timing, asset diversification, and growth opportunities in emerging sectors. If you're someone who understands the fundamentals of investing and are looking for a more tactical approach to accelerating your returns, this is for you. Let's begin. Investing isn't merely about capital preservation, it's about generating alpha. To truly multiply your capital, understanding where to allocate resources and when to pivot is crucial. Over the next 90 days, we'll employ strategies that go beyond basic dollar cost averaging. We'll look at sectors primed for explosive growth, capitalize on market inefficiencies, and utilize leveraged financial instruments with care. This approach demands not only capital, but also intellectual rigor and an understanding of macroeconomic indicators and their impact on asset classes. Balancing risk and reward is the bedrock of any successful investment strategy. Diversification isn't about spreading thin, it's about intelligently allocating your $1,000 across uncorrelated assets to mitigate risk while exposing your portfolio to higher upside. We'll focus on a core satellite strategy where the core is invested in stable, low volatility assets like blue chip stocks or low-cost index funds. The satellite portion, where we'll focus on generating outsized returns, will include high beta stocks, options, and even crypto assets that can provide significant leverage in a short time frame. With only $1,000 to deploy, leverage becomes a powerful tool, but it's a double-edged sword. We'll delve into using options, specifically buying calls or utilizing spreads on high-growth stocks that have a history of volatility. This isn't for the faint of heart. You need to understand implied volatility, the Greeks, and the potential for time decay. The idea is to capitalize on short-term movements while protecting your downside through carefully planned trades. Identifying sectors with momentum is crucial for short-term gains. Over the next 90 days, we'll monitor trends in sectors like AI, renewable energy, and biotech, industries that not only have long-term growth potential, but also experience short-term spikes due to news cycles, consumer data, or earnings reports. By rotating into these sectors at the right time, we can ride the wave of market sentiment. For example, entering positions in an AI ETF, or investing in an undervalued biotech stock ahead of a pivotal FDA approval could be game changers. Timing the market is challenging but not impossible with the right tools. We'll employ technical analysis to time our entries and exits using indicators like moving averages, RSI, and Bollinger Bands to assess market sentiment and price action. Coupled with a macroeconomic overview such as tracking interest rates, inflation data, and geopolitical events, we'll make informed decisions on when to enter and exit positions to maximize returns. Each week, reassessing your positions is vital. Markets are dynamic, and what works today may not work tomorrow. We'll review our portfolio weekly, analyzing the performance of each asset. If a stock hits our profit target, we'll consider reallocating profits into a different higher conviction play. This iterative process allows us to stay nimble and adapt to market conditions, which is critical in a short 90-day window. As we approach the end of our 90-day challenge, we'll need to take calculated risks to push closer to that $10,000 target. This could involve increasing our positions in winning stocks or even taking a position in an upcoming IPO or a speculative play in the crypto space. The key is to remain disciplined, set stop losses to protect capital, and be ready to exit if the market turns against us. Whether we hit the $10,000 mark or not, the real value in this challenge lies in the lessons learned and the strategies developed. Short-term gains are exhilarating, but the knowledge and experience gained are far more valuable in the long run. As we wrap up, consider how these strategies can be applied to your broader investment philosophy. Continuously refine your approach, stay informed, and don't be afraid to adjust as markets evolve. Remember, staying adaptable and controlling your emotions will yield the most consistent and balanced decision-making process. The principles of smart investing extend far beyond 90 days. They're the foundation for lifelong financial success. Here's to smarter, more strategic investing. Thank you for watching 90 Days Better. If you found this video insightful, please like, subscribe, and share your thoughts in the comments. We cover a variety of transformative habits and invite you to explore them. After all, you may be only one video away from changing your life for the better. Until next time, stay motivated and keep growing.